Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. We are jumping right into a deep dive tailored specifically for you today. We're looking at Adobe's huge Q4 and full year FY 2025 financial reports.
Yeah.
And our mission is pretty clear. We've got to cut through the jargon in the press release. We need to figure out what these record numbers actually mean for Adobe's health right now and, where they're headed.
Exactly.
The headline is just massive record revenue all around.
It is, but what's really fascinating here is the reason for it. The CEO, Kantara Narayan, he basically said these results are directly because of Adobe's, and I'm quoting here, growing importance in the global AI ecosystem.
So he's putting AI front and center.
Front and center. He's saying, look, AI is the engine, is what's driving this entire subscription machine.
Okay, so let's unpack that with the hard data from FY 2025. The full year total revenue, it hit $23.77 billion.
Which is a solid 11% year-over-year jump. Last year was, what, $21.5 billion? So yeah, good steady growth.
Steady growth, for sure.
It is steady. But, the real sign of just how healthy they are operationally, it's their cash strength.
The cash flow.
Adobe generated a record $10.03 billion in operating cash flows. I mean, think of that as the fuel tank. That's the financial muscle they can use to fund all that massive AI compute power. And they don't even have to blink.
That kind of cash gives them a huge runway. But for a company like Adobe, the real health indicator, it's got to be the recurring revenue.
Always.
So let's look at that subscription engine. Their total annualized recurring revenue, the ARR, it ended the year at $25.2 billion.
And that ARR is really the heartbeat of a SaaS company, right? It tells
Yeah.
you how sticky your customers are.
Exactly. And that number is up 11.5% year over year. The overall subscription revenue was $22.80 billion, which is up 12%. So very healthy.
Okay, so the engine is healthy, but we need to know who is actually pushing that 11-12% growth.
Right.
So Adobe breaks its revenue into two main buckets. You've got digital media, that's your creative cloud, and then digital experience, which is more the enterprise marketing side.
And how did they do?
Well, digital media hit $17.65 billion. That's 11% growth. And digital experience was $5.86 billion, which is about 9% growth.
So if the overall growth is around 11%, where is this AI boost that the CEO was talking about? Where is it hitting the hardest?
This is where it gets really interesting. And it suggests maybe a bit of a strategic shift.
Okay.
The fastest acceleration wasn't from their core group, the creative and marketing professionals. That grew at a strong 11%. No, it was the business professionals and consumers group.
Really?
Yeah. Their subscription revenue grew by a massive 15% year over year. That's $6.50 billion.
Yeah, hold on. 15% growth among non-creative users? That feels way out of proportion.
That is.
That's the real story here then. This isn't just about designers getting better tools. This looks like huge market expansion. It's probably driven by things like Adobe Express and Firefly, pushing those AI tools out of the design department and into, general business use.
You've hit it exactly. That 15% shows Adobe is moving from just a niche tool provider to an essential enterprise AI player.
Yeah. So let's look forward then. What are they saying about FY 2026?
Well, they're targeting total revenue for FY 2026 between $25.90 billion and $26.1 billion.
That sounds pretty ambitious. But I have to ask, if they just grew their ARR by 11.5% this year, why is their target for next year's ending ARR growth only 10.2%?
That's a great question.
Are they being conservative? Or do they see a slowdown coming in the creative market?
I think they are definitely guiding conservatively, which is just smart, but they're also signaling where their focus is. Starting in FY 2026, they're going to emphasize guidance on customer group, subscription revenue, and total company ARR growth.
So they're doubling down on the subscription health.
They're betting the farm on it. That shift tells us they see those two customer groups as the primary drivers. It's all about retention and recurring revenue now.
And I'm guessing their profitability targets show that same confidence.
They do. They're targeting non-GAAP diluted earnings per share for FY 2026 between $23.30 and $23.50. And just to clarify for you, non-GAAP excludes certain one-time costs. So it's a way of showing they're confident in the core profitability of the business itself.
Okay.
So let's bring it all back to the main theme, AI. We've seen this incredible growth from business users, all fueled by AI. So here's the thought. Given that focus, Which of Adobe's two big customer groups, the creative and marketing professionals or the business professionals and consumers, which one do you think will actually benefit the most from AI features over this next year?
Write your opinions in the comments section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.